Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 5 out of 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-off week, which would see the strongest performance coming from CBAM portfolio number 2, down 1.07% on the week, down to CBAM 5 V2, down 1.31% on the one-week basis. We began to see some respite there for heavily sold-off Chinese equities on the back of property woes and some strong youth unemployment coming there from the regulatory crackdown on Chinese tech companies, and then some respite there for Chinese equity leading up to the October 16th Chinese Communist Party Congress, and that would lead to some sort of outlook really that the market is looking for on the stance on zero tolerance COVID policy going forward for China, and put the potential reopening and again restoration of global supply chains, and that would see HSBC, MSCI China and our Columbia Third Needle China position up 3.06% on the week. As I mentioned earlier, a relatively risk-off week, and you'd see that safe haven trade with 91 Global Gold up 3.23% on the one-week basis as well. Switching over to the European story, we're beginning to hear stories around a potential energy price cap and what that could mean for an erosion for European GDP as stockpiles of natural gas and crude oil run low in the European region, and Europe effectively going through an energy crisis that would see Europe being one of our bottom performers there on the one-week basis, with Schroeder European smaller companies and Bailey Gifford European equity down more than 3.5% on the one-week basis. Outlook has turned a bit more hawkish there for the domestic economy in the UK, with some analysts predicting inflation going as high as 22% in the year 2023, and that would see HSBC FTSE 250 pulling back 3.83% on the week basis. Switching over to quarter to date, you see 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns on a relatively risk-on quarter ranging from 6.51% for CBAM portfolio number 5, and again down to 1.17% for CBAM 1V2. As the European energy crisis continues to persist coming into the quarter, we did see again some tailwind there for alternative energy solutions through Pictet Clean Energy and iShares Global Clean Energy, both respectively up more than 23% on a quarter-to-date basis, and then some recovery there that we've seen from Japanese equity markets on the back of some lifting of restrictions, COVID-related restrictions in Japan, bolstering the domestic economy, up 12.8% for JP Morgan Japan on a quarter-to-date basis. In terms of detractors from performance, we continue to see those stories and nuances from property woes down to regulatory crackdowns, and also just that rising unemployment figure and some frustration really for the Chinese populace, really weakening the Chinese growth outlook, and that would see all 3 positions in China being bottom performers across Bailey Gifford, Columbia Thread Needle, HSBC, all down more than 6% on the quarter.